Avrio was founded in 2002. Doing this with one hand might be a little dangerous, especially given the wheels move. That's it. Thank you. And we were founded as part of FCC Ventures. It was founded by two of my partners, Aki Georgikakis and Jim Taylor. And it was actually one of the first dedicated agriculture food investment funds in North America. It was spun out into a more traditional limited partnership, general partnership structure in 2006. Since inception, Avrio has invested more than 200 million in more than 70 ag and food related businesses across the country. We have a national mandate, presence in Quebec, and invest from coast to coast. We also have US-based investments with a number of partners, whether it's NGen, Kleiner Perkins, Khosla, Syngenta, Monsanto. So we have a lot of folks that know a lot more about the ag industry than we do as partners. We're currently on our third fund. It's $108 million. Most of the way through that, in fact, so hoping to raise a fourth fund shortly. Our limited partners, the folks that invest their money with us to turn around and invest, include Farm Credit Canada, EDC, Alberta Enterprise Corporation, BDC, AIMCO, HarborVest. And so what's important to take away there is we've got a lot of very credible limited partners investing in our fund, and I think it speaks to not necessarily our smarts, but certainly our credibility as investors in the space. Our investments generally run from $1 million to as high as $10 million. On the larger deals, we have no shortage of partners that we can bring in to invest alongside us. Most of our investing is in the growth stage, but on an infrequent basis, and increasingly frequent, actually, I should say, we're investing in earlier stage opportunities, both on the food and ag side as well. At a conference attended by angels, many of whom I'm sure have invested in the real estate space out here in British Columbia, which is a bit like shooting fish in the barrel. I'm here to tell you that money can be made investing in ag and food. We've been very fortunate. One of our investments, a company called Wolf Tracks, which was a Winnipeg-based seed coder. We sold back in 2014 to Compass Minerals and returned 15 times our invested capital. It won the Canadian Venture Capital Deal of the Year award. Another one of our investments, which you may be more familiar with, is Brookside Foods, which is based out in Abbotsford. Obviously, healthy snacking products. It was sold to Hershey, won CVC of the Deal Year of the Deal Award in 2013. It was sold for 7 times our initial, or our return was 7 times our initial investment. And last but not least, if you're hemp heart fans, we had an investment in Manitoba Harvest, which is in the hemp heart business. You'd get them at Costco, and it was sold in 2015 to Compass Group for a return to Avrio of 6 times our investments. So we've had some success ourselves. Sorry. There we go. Here's some other notable exits, just again to reinforce that money can be made in the space. RX Bar, which was sold to Kellogg's just in late 2017, was a company that essentially went from 0 to 100 million revenues manufacturing health bars in under 3 years, and ultimately sold for 6 times or 5 times sales. On the ag tech front, and I was just talking about this one with Mike Mannion recently, John Deere acquired a company called Blue River Technology. Blue River was a company backed by Syngenta and Monsanto in the Valley. It used NDVI technology, AI, robotics, essentially for precision spraying of weeds and cotton crops and the thinning of fields for what was it? Escapes me, sorry. But 305 million for a company that had less than 3 million in revenues. The last 2 deals you probably know a lot, or certainly the Dia Foods deal, which was of course based here in Vancouver, sold for 5.1 times sales. Vega, great Vancouver story, sold for 4.1 times sales, and I think there were a lot of angel investors in that. So again, the message here is money to be made in the space. So I think it's important a little bit to talk about the big picture thesis as to why we chose to invest in agriculture. At the end of the day, as you can well see, that the estimate is that population growth over the course of the next 25 to 30 years will take us to 9.5 to $10 billion people on the planet. In 1950, we only had 2.5 billion people on the planet. Grain demand alone is expected to increase by 50% by 2050. The bulk of the growth in the population is to occur in emerging markets, 80% of it, in fact. And what we've seen is changing dietary appetites in those countries. As they GDP of those countries increases, they consume typically more protein, more calories, and the estimate is that we need to grow the world supply of food by 70% in order to accommodate their needs. There is admittedly, some contention that we really don't need to grow our food by 70%, largely because of the amount of food waste. 40% of the food between farm and fork is lost due to waste. So clearly, if we are able to do anything to address food waste, the amount of growth in food supply may not be quite as significant. Having problems with the controller here. World stress map, that's it. I've gone one page over on my notes. Here we are. So in terms of the world stress map, obviously environmental stresses are increasing, and growers throughout the world have to contend with external environmental impacts, whether it be climate change, weather volatility, water scarcity, and land degradation. Outside of the U.S., 90% of irrigation used in the world is by way of flood method and is wasted. Imprecise application of inputs, and that's typically NPK fertilizer, is estimated 40% of the fields are being over-fertilized, and that yield loss suffered due to inadequate fertilizer application is estimated at 15 to 20%. Change in climate is already reducing water and arable land, and Canada is one of 6 countries that is viewed to have sufficient land to be able to increase our production significantly. And per the map, 2/3 of the world's surface are facing high or medium impact from climate change. So this basically boils down to how do we do more with less? Less inputs, less land, less water, et cetera. And to understand that, I think we need to look a little bit at the advancements on the farming side over the course of the last 50 years. So first and foremost, we had the mechanical revolution in the early 20s where, sorry, we've gone a few pages too far again. The mechanical revolution where horse replaced tractor, where mechanized equipment allowed for better tillage, and it basically resulted in the size of farms increasing rather significantly. The next evolution in the 1960s was the chemical revolution with the advent of modern crop inputs, nutrients for increasing yield, and again, we saw the food supply increase or production levels increased dramatically. The last sort of evolution was the biological evolution in the 1980s with the introduction of hybrid seeds, both corn and soybean, oilseed crops, as well as herbicide-resistant canola and crops that were tolerant to cold, et cetera. And at the end of the day, the 3 revolutions combined essentially increased food production, corn production 5-fold on that same acre of land. And so, here we are today with an ag industry that's sort of the least digitized of major industries, facing increasing labor costs, tougher regulatory environment, the need to reduce environmental footprint, growing demand for food, and increasing need to adjust or to address consumer demands and tastes. Technologies such as auto steer, yield monitors, precision application of crop inputs, soil sampling, all these are well entrenched and adopted by farmers. However, right now there's an abundance of data from all these monitors being generated for farmers, and yet the ability to synthesize all that information and come up with actionable items for farmers to do is increasingly difficult. And I think it means a lot of growth on for the development of artificial intelligence, deep learning, and algorithms to turn that data into decisions that farmers ultimately can reduce their costs or improve their yield. While historically food and ag were reviewed as sort of separate industry by investors, businesses, and consumers, we believe that they're increasingly linked as consumers have become more sensitive to how their food is grown and processed. They're increasingly aware and concerned about agriculture's environmental and social footprint and the interconnected nature of the supply chain. As you might say, is exemplified recently by the acquisition of Whole Foods by Amazon, means that there's a growing need for transparency and traceability in the food supply chain. Ultimately, both growers and consumer packaged good companies will need to react quickly and more knowledgeably to customer demands and changing tastes. And what we're seeing is increasingly small, innovative companies like the ones in the back of the room here today are the ones that are coming up with the creativity for the large CPG companies, resulting in, quite frankly, a drop in revenues for the traditional consumer packaged good companies like Kellogg's. What this means, it translates to a lot of those larger CPG businesses are coming in and starting up their own venture capital groups to invest in small, promising companies. In terms of sort of current trends in food, probably don't need to explain to this crowd what those are. We're seeing healthier diets, more people concerned about animal welfare. For example, McDonald's is moving to cage-free eggs. They think it's going to take them 8 years, but largely driven by their consumers moving in that direction. We want to see more environmentally sustainable farming practices to generate the food. Growth in specialty foods is outpacing conventional foods. We see more gluten-free, organic, natural, et cetera, non-GMO, transparency on food labels, cleaner food labels. And last point, of course, is the CPG grocery companies, food service are facilitating this growth by rapidly expanding specialty food product offerings to retain and attract customers. And I think the largest food vendor in the U.S. and organic food vendor in the U.S. is now Walmart. In terms of additional trends on the food side, less use of antibiotics in the production of meat, poultry, fish. You may be aware of a number of companies, whether it's Memphis Meat, Impossible Foods, or Beyond Meat, that are actually growing foods, meat in labs. Some of them go on to say that they think by 2030 the traditional protein supply chain will be totally annihilated. That's probably not the best word, but nonetheless, we think that's probably a little aggressive because we like our steaks in Alberta, but nonetheless. Food traceability, food safety, very, very important. Blockchain can be a real great technology, especially on the traceability side. Increase knowledge and demand for probiotics, prebiotics on gut health, and of course, increased demand for plant-based and alternative protein. You may be aware that Director James Cameron actually has a big investment in a pea processing plant in Vanscoy, Saskatchewan. Rochette has one in Manitoba, and a number of others. So we expect to see lots of growth in the alternative protein space. On the ag trend side, seeing lower commodity prices, lots of consolidation in the ag industry with obviously Syngenta being bought by ChemChina, Dow-DuPont merger, Monsanto Bayer. You know, a lot of farmers out there are a little nervous, less acquirers, less competition. but that consolidation is likely to continue. Agrium, of course, in its acquisition recently as well. Increasing demand for organic fertilizers, pesticides, soil health, companies like AgBiome, in aquaculture focusing on the health of soil around the roots. Clearly a need for lower carbon footprint, water usage, less use of antibiotics in meat, and last but not least, real shortage of labor and aging farmers really points towards more use of robotics. So last comment on this, what is ag tech? Generally, technology used to increase the overall efficiency of cultivation plants, animals, or other living organisms. I won't go through inputs in sector verticals or the sort of the market challenge met. Just suffice it to say, lots of different technologies being used in all these areas. Agribusiness, wide range of activities and disciplines that encompass all aspects of modern food production. Again, I won't go that into too much detail. Food technology, sustainable protein, some of the verticals, food e-commerce, we're seeing a lot more of that, chef's plate, direct to home, delivery, really changing the traditional channels to market. Next one. So just to give you a sense of the deals, 2017, $1.1 billion in financing, 137 deals in the farm tech space. Bit of a drop in 2015, but again up from 2016. So lots of activity. Sorry, I think I just lost it. I just went back to the start. So I'll end up rather by saying that the ag food space, very interesting, lots of growth, lots of opportunity to make money, and I personally look forward to seeing a lot of the presentations here later today. Thank you.